Hi, everyone. Thank you so much for joining us today. My name is Anna, and we are Epic Events, the organizer of today's Deep Tech Pitch event. Epic is an e-commerce website for frontier technology products and events. Frontier tech includes AR, AI, blockchain, robotics, biotech, and other bleeding edge industries. Our mission at Epic Events is to ignite ideas and expose technologies that will underpin future society. Before we dive into our event today, I want to cover our next upcoming events. Let's see, there you go. So our next event is next Tuesday, May 5th, and we've got a bunch of events lined up. So today's event is Pitch Your Deep Tech Startup to VCs and Angels. It's a chance for startups to pitch their company in front of an audience and panel of expert VCs and angel judges that come from a variety of industries, but with a special interest or tie to deep tech. Our deep tech pitch events showcase mostly deep tech startups, but we also include 1 or 2 non-deep tech pitches per event. Before we introduce the judges, I want to cover the format of the pitch. Each team has 12 minutes per team. It's 4 minutes for presentation, 4 minutes for Q&A from the judges. If we have extra time, we open it to the audience. But you can always ask questions in the chat, and we'll try to incorporate it. Lastly, the judges have 4 minutes to give feedback. All right, so judges. For the audience, can you please introduce yourself, your company, your investment thesis, and any prior relevant investments that you have? Maybe Shayna, you can start.
Yeah, I'm Shayna Modarresi. I am founder of Lodestar Ventures. A little bit about myself. I've spent the last 10 years as a VC in the Valley. First at XG Ventures, where we invested in both consumer and enterprise technologies. Roughly half of our investments have been acquired by the likes of Facebook and Google. And we also saw 3 of our investments IPO, which were Facebook, Box, and Twitter. At Lodestar, essentially, we are investing in entrepreneurs that build technologies that create lifestyle efficiencies. And thank you for the invitation. I'm excited to be here today.
Can you give us some examples of what lifestyle?
Yeah, that's sure. Yeah. As an example, I invested in a company called Kango, and Kango is an Uber plus care for kids.
Okay, awesome. Alexander, would you like to go next? You are on mute right now.
Yeah, sorry about that. So hi, everyone. My name is Alexander Piskanov. I'm a partner at a fund called Rovento Ventures. We invest out of Singapore and San Francisco into the field of frontier tech. We normally focus on early stages, so seed stage and Series A. And we have a portfolio of around 25 companies invested in things like Boom Supersonic, who manufacture supersonic jets, Mighty Buildings with the technology for 3D printing of buildings, as well as a lot of others in material space, in AI, and in quantum computing.
Okay, and actually, judges, can you go into specifically what you like to look for in startups as you evaluate them? And maybe Shayna, you can go into that because I didn't mention that before.
Yeah, I'll just quickly say, yeah. At this stage, I invest at seed and Series A, and so the things that I look for essentially is a very strong team, because you only have so much to go on at this stage. It's really, so the team is very, very important. And of course the market, it has to fit into my thesis, but the number one thing for me is the team.
Okay. And Alexander?
Sure. Well, firstly, I agree that team and market are important. Also, given that it's deep tech, it's also very important to have an actually competitive product, right, which you can defend, which is actually useful for many purposes eventually, so that it can expand to different verticals. Yeah, that's one of the things.
Okay. Can we hear from Alec?
Hi, I'm Alec Chen. I'm partner at Blue Bear Ventures. We are a seed stage firm that invests in founders who are typically working at the frontiers of science and technology, typically coming out of top tier research institutions. Prior to this, I was co-founder of Citrus Foundry, which is a technology incubator based out of UC Berkeley, and that's where a lot of our roots come from. So we are looking for companies and founders that are a lot of times applying advances in engineering or software to the sciences, applied biology, chemistry, physics. And, in terms of the companies and our sort of investment thesis, we're looking for, technical founders. A lot of times we really like to invest in scientist CEOs who have deep understanding of the technology they're building, a sort of unique technology differentiation based on sort of discovery and research. And lastly, what we call innovation over invention. So we're really looking at technologies that are solving real challenges that we're facing in the world today. And for us, that's, we see health and climate as two of the biggest areas that we are investing in. A couple companies we've invested in, IR Labs, optophotonics, sending data using light instead of copper, at 100x the speed, and that's possible today. Aether Bio, applying robotics, high throughput robotics, and machine learning to do synthetic biology so that we can enable biological manufacturing. Another company, GenEdit, that does delivery of gene therapy. So finding ways that we can deliver new ways of curing diseases without using viruses.
Okay, awesome. Yeah, and so what do you like to look for in your startups?
Yeah, so as I was mentioning, we do spend a lot of time trying to understand the founders. We do like to invest in technical founders, so these scientist CEOs, and really help these teams at their earliest stages around the formation. And help them understand this process of taking research that they've maybe spent years, maybe even a decade working on, and helping them translate that out into the market.
Okay, awesome. Okay, so Luke, I think you are our last judge right now. Oh, and you are currently on, there you go.
Hi everyone, very nice to meet you. My name is Luke Postiavsky, and I've spent most of my career in the twin areas of health and climate. Most recently, I was the CEO of a company called Curian, which was named after Marie Curie, who was the double Nobelist in physics and chemistry. And at Curian, the model was a subscription model for hardware, software, and services for CBD extraction laboratories. So taking hemp and efficiently making it into CBD, anticipating that the FDA is going to regulate this area and it's going to become more of a science-based medicine. Right now I'm mentoring a class at Stanford called CE 246, which is of real value in the real ventures in the real economy, and I'm looking at investments primarily in psychedelics actually. So we're seeing some very interesting transactions. Atai Life Sciences, Compass Pathways that just completed a $80 million Series B. There is a very interesting early IPO on the NEO in Toronto for MindMed, which was sponsored by Kevin O'Leary, one of the Mr. Wonderful, so to speak. And so I'm looking across. I'm interested in neurotech very broadly, and I'm also tracking probably about 12 different companies that are pursuing an FDA process around psychedelics for anxiety, depression, and other things. But what I look for in entrepreneurs and in companies, I really like to focus on interdisciplinary innovations. I really like to focus on IP intensive areas. I have a general belief that things that are worth doing are take time to bake. And so I don't, the sort of 3 to 5 year timeline I'm not interested in. I'm really interested in entrepreneurs that are believe that that they're building something large over time.
Okay. All right. Awesome. Thank you, judges. Okay, so now let's have our first startup. We've got Evan Golub with Wana.
Hey guys, nice to meet you. Can you see me?
Yes.
Awesome. Well, my name's Evan. Let me just take 30 seconds to explain why I'm building Wana. I was chronically sick starting in 2013. I was misdiagnosed for 4 years across 30 practitioners. It ended up being Lyme disease as well as mold illness. And after biohacking my way back to health, I ended up building a community of over 100 Lyme buddies who I helped through their battles. And while doing so, was wondering why there is no UGC platform that is specifically designed for health information. So let me show you, let me share my screen. Sorry. Okay. So welcome to Wana. Wana stands for We Are Not Alone, because everyone with a chronic illness feels like they're battling this all by themselves. When we think about the TAM, we have over 150 million Americans alone living with chronic and what we call invisible conditions. Some are listed here. Other conditions include endometriosis, Crohn's, colitis, PCOS, POTS. Most of the audience or the people facing these conditions have been failed by Western medicine and more conventional approaches. So they're turning to the internet to find others like them who are going through these battles. And so they're really using Facebook, Reddit, and the younger audience is particularly using Instagram, which, as much as I love these platforms, I don't think they are designed or the appropriate platforms to discuss vulnerable health information. And also information is disorganized when you start thinking about media and top books, podcasts, and YouTube videos across diagnoses, symptoms, practitioners, products. They don't really offer that. So we're creating a solution that brings in community support, education, and then we're bringing experts to the platform, as well as products, services, and practitioners. Looking at our data, we launched a few months ago. We have 6,000 users. We just crossed 40,000 messages yesterday on the platform between users. We've collected nearly 2 million health data points. We're spread across, our users are spread across 4,000 zip codes, and that's across 1,800 cities across the US. We're collecting lots of health data across each user. When we look at user retention, we look at all users and then active users. Those are the two cohorts. I'm just going to show you all users, which are lower numbers. 1 week retention really in the 70s, 8 week around 50%, and then 12-week retention, which I couldn't fit in the snapshot, is above 40%. We're collecting tons of structured health data. So looking at top diagnoses, we have over 2,000 people with depression, over 4,000 people with anxiety on the platform already. We're collecting which treatments have been most helpful for them. We can start to personalize the user experience based on all of this information. When we think about monetization, we're building out a marketplace where we're aligning with brands and eventually services, and we're starting to talk to practitioners about onboarding them to the platform. We want to bring telemedicine options to the platform, and then we're already in touch with a company that's kind of trying to disrupt the CRO space when we think about kind of patient recruiting for clinical trials. We're raising 1.25 million to fuel the next 18 months of growth. And the main hire there will be a head of product. We have a CTO already who is super, super impressive, and we just need a head of product. Let me just show you some of the designs real quickly. So these are designs that we're releasing soon of the next version. We're having custom filters based on your diagnoses, symptoms, and treatments up here. We're building in upvoting so we can start to create kind of social rankings across posts and people's profiles who've been helping you, and then kind of create ambassadors within different conditions and communities. We have a library section. We'll be pulling in your topics as well as trending topics. So if you click on something like Lyme disease, you'll be brought to an information page that looks like this. We hired the editor-in-chief from Everyday Health, and she's producing all of this content. If you want to see posts that mention Lyme disease, we automatically hyperlink every single time. Any of our conditions are automatically mentioned. If you want to meet people who have this diagnosis, you would just click here and see all their profiles. We find users are DMing and connecting with each other. In fact, we're hearing that users are meeting best friends now on the platform. We've curated over 5,500 videos, books, and podcasts across the 300 different topics we're in. These are some new designs of our match section. So we're connecting people based on location, their diagnoses, as well as their symptoms. And then here's a standard profile. So here's a little bit about James, his bio, his story with chronic illness, his latest posts, his diagnoses, symptoms, treatments. We're building this section out now, which are top practitioners. And we'll be onboarding practitioners to the profile and then creating a marketplace. And then a marketplace as well for products. So he can say bee pollen by Beekeepers Naturals is his favorite product. If you click in here, you'd be brought to kind of the Beekeepers Naturals brand page, which we're building as we speak. And then you'd be able to, we'll be uploading like videos from the founders of these companies, and you'll be able to purchase these products, leave reviews. And we've got brand partners lined up through June. We're rolling out one new brand partner every single week. Hilma was our second brand partner. We just started producing educational content around their products. Yeah, and that's a little bit about WANA.
All right, thank you. Judges, questions, and Q&A.
So I have a question.
Sure.
Oh, or do I put it in Q&A?
No, just say it.
Okay. Thank you for your presentation.
Shayna.
I didn't see, maybe I missed it, so correct me if I'm wrong. Did you have a team slide?
I didn't, because it's funny. I was like running through this and it was like 6 or 7 minutes. So I was just cutting out all the slides. I'm happy to send you our team slide afterwards. We have 5 full-time employees right now and a team of 6 medical experts that produce all of our content.
Okay. Are you a sole founder or do you have a co-founder?
I have a co-founder who's a female.
Okay.
And then we have a third kind of C-level person. Our CTO is, we consider him kind of like a co-founder just because of his equity in the company.
Okay. And then one other question I'll let other people ask. How are you going to acquire more customers?
Good question. Kind of organically through the practitioner network. So we actually spoke with a huge doctor today who's connected to 400 functional medicine doctors. We showed her WANA. She loved it. She said, how do I get this out to my community? So going in through practitioners, aligning with really like ambassadors and influencers who've been through the chronic illness epidemic. They understand how hard it is to go through this and to meet others and to share what's worked for them. So we're starting to align ourselves with more than 100 influencers that we've identified. And then the ability to push your profile from WANA to Instagram is something we're building now. So you can imagine people like sharing it to Instagram and maybe Facebook and like creating that viral loop. And yeah, those are kind of the main, and then there's just been like a natural organic, like NBC just reached out to us. They want to have us on the Today Show, and just like, and that's without sort of using PR. They just proactively reach out to us. Apple just reached out to us and said they love what we're doing. They want to feature us in the App Store. So hopefully some kind of just
partnership or something.
Yeah, exactly.
Okay, thanks.
Mm-hmm.
How do you deal with, I guess, HIPAA compliance and privacy concerns for patients? And then just sort of the follow-up in this different way of passing that to is, how do you build the trust of your users?
Yeah, great questions. So we actually don't have to be HIPAA compliant right now. That doesn't mean that we're not going to be. In fact, our CTO came from a cybersecurity healthcare company and is very, very familiar with that. So that is on his to-do list. But right now, users sign our terms and conditions and privacy policy, and they are voluntarily giving us their information. You know, that said, we take privacy very, very, very seriously, and we are not giving it to any of our brand partners or anything like that. Your second question was, wait, it was HIPAA compliance and then?
Well, it's, you know, there's sort of being compliant and then there's actually building the trust of the users.
Of course. We feel like we've built a brand that feels pretty understanding. We see this over and over from our users who literally sign up and they're like, oh my God, I can't believe this hasn't existed before. I feel so safe here and protected. We host a Zoom call for all of our users every Wednesday. And we just had a girl last night log in and basically say, I was part of like 10 different Facebook health groups and they just like give me anxiety. And since I downloaded WANA, I literally exited all of those health groups and I'm just on WANA now and I feel safe here. So I think it's about building a brand that feels, you know, we've been through the battle. My co-founders my closest line buddy. We've been through this. We've built a network organically by allowing people to feel safe and comfortable with discussing health information. And then we've just brought it to a digital product, and it seems to be resonating with the people that are coming, because it feels, I think, a little bit more organic than some of the other players out there.
I want to give the other judges a chance to ask questions.
Okay, I'll ask a brief question. I'll also leave something for feedback, but you briefly mentioned your monetization options. And I'm just wondering whether you can elaborate a little bit more as to how much exactly are you planning to charge each of those potential clients?
So the brand partners, you mean?
Yes,
Or the
and
practitioner?
what would be sort of your main revenue stream out of all?
Yeah, the brand practitioners, we're structuring now different agreements with different brand partners. Some are affiliate, well, they're all affiliate deals, but some are through a percentage of revenue, and then others are through more of a CAC cost model, because they basically said, they say like they view us as another form of Facebook. And so we'll just pay you what we pay Facebook to acquire a customer.
Which percentage?
What's that?
Which percentage? How much exactly?
Which percentage? So you're going back to the affiliate fee. We've structured between 10 and 20% for the current brand partners. And then for a CAC cost, there's one company that's paying us upwards of $50 for acquired customers.
Okay, and what does the 10 or 20 depend on?
What does the 10 or 20 depend on? It's just a negotiation between each company.
Okay. Sure.
Yeah.
So, yeah, I will also leave something for feedback as well afterwards.
Sure.
Luke, did you have any questions?
Sure. Yeah. Thanks so much, Evan. That was great. I actually, my mother has Lyme disease, and so I've for the last 25 years I've thought a lot about this, and I've been, not, I wouldn't say super active, but have supported Stand for Lyme, which sponsors research at Stanford and a couple of other places, and Sherry and Laird Kagan. Actually, Laird has his wife and his two daughters have Lyme disease, and he's a very active investor. So I sent you his information.
Awesome. Thank you.
Yeah. Can you just talk about like your monthly recurring revenue and customer acquisition cost, or anything related to kind of the metrics of where you are?
Yeah, monthly recurring revenue. We just started putting out educational content last week about our brand partners. So, and that actually came earlier than we were expecting. And so these affiliate deals are just brand new. So we don't have really a lot of data around that. As far as customer acquisition costs go, they've just come farther and farther down. We've become more and more efficient with our marketing. And I think we're hovering around between $2 and $3 per install right now. So yeah, and that started upwards of like $6 to $7 depending on the channel, whether it was Facebook or Instagram or Google or Apple ads. And those have come down significantly. I mean, during COVID, we've had some installs at 90 cents, but I don't want to tell you that our CPI is 90 cents because it's, there's like a blended aspect to this.
Yeah. Okay. So it's pre-revenue, and it's basically two co-founders and a third. And what are you? Yeah. So you're.
Yeah, sorry, I'm the CEO. My co-founder is the head visionary. It was sort of her idea. She is the one who's always like, Ev, why am I going to Google to search for books, podcasts, and YouTube videos? Like, let's just embed that in. Let's embed practitioners in. She's just like a product person, sort of without a product background. And then our CTO, who came from Solera. They're a Series A-led cybersecurity healthcare company. He's built more than 25 products and is extremely knowledgeable about health, and he's kind of a biohacker himself. And just, he wasn't looking for a job, and I got introduced to him, and 2 weeks later, we had a signed agreement. So it was, he's been an incredible addition.
All right, guys, let's move into feedback. We kind of went into it already, but who would like to start?
I'll start.
Okay.
Thanks again for the presentation. You did a really good job. And the piece that I actually loved the most was the story, the personal touch. Yeah. I really think that that's a really, instead of just diving into what you're doing, that just kind of started it off really strong, at least for me. The feedback that I have is I would have preferred to have seen a team slide. That is really important to most investors. And I understand you had a limited amount of time, but so I'll let it pass this time.
Well received. I was trying to trim a 25 slide deck down to like 6 slides. So yeah, sorry about that.
No, it's okay.
Another judge?
Okay, I can continue. So, well, I've also had a brief look at your LinkedIn profile. I think that when you're trying to fundraise, it's not as good to accentuate the deals that you've invested in. It's mainly better to accentuate your health tech background, maybe something in e-commerce, right? And it's quite confusing, to be honest. Also, I was quite surprised when you were talking about a co-founder of yours. You said, oh, she's a female, right? Okay, she's a female. What's more interesting is, once again, her professional background, right? Not her gender. So what else? Well, I think that it would have been good to see the timeline of your future milestones. So maybe going to new markets, maybe developing new kinds of features, maybe accessing new partnerships and things like that, because it's very helpful for investors to sort of showcase your traction, at least the ones that you expect to have. Also, it would have been quite helpful to see, I think, your average user profile, right? So I don't know, it's maybe gender, maybe age, maybe like geographical distribution, how much they're willing to pay and things like that, because the investor would want to know, well, do you know your user? Do you know, like, how are you going to get his money back, basically, right? So you have to convince him from different aspects.
Yep. Thanks for that.
Also, last point, you've mentioned some competitors, right? Like, I don't know, Facebook, but Facebook is a big platform. It's not a startup anymore. Maybe you should think about some startup competitors as well, because when you don't list those, an investor has a question in his mind. Well, either you haven't researched the market enough, or there is really no competition from startups. And if there is no competition from startups, maybe then there is no market in the first place, right? So why are you here trying to sell this product?
Yep, thanks. I just want to mention real quickly, the only reason why I mentioned she was a female is we've been pitching to VCs that only invest in female founders. And so when I show up, they get confused. And so that's the only reason why I mentioned that. And then the startup competitors, we have a slide in the longer deck that mentions all of the startup competitors. I had to remove it for time purposes, but I'm happy to share that with you.
Sure. Thank you.
I can just add my.
Yeah.
Oh.
No, go ahead.
Yeah, just quick feedback. Yeah, I think echoing some of the other judges, I think the personal story is a nice touch, and then I think that is actually a great point to transition into your team itself, because there is that personal touch, and like you said, right, your co-founder also went through had Lyme's disease, and so I think that was a very important part that was missed. I think the other part I kept wanting to hear about, and this was actually also another question I had, was hearing about patients like me, because that to me is the biggest gorilla in the room in terms of competitors. So would like to see you address that.
Yeah, so we're close with PLM. I'm friendly with the founders who just exited to United. And the Mighty's actually probably our most direct competitor. The CTO who just left is actually coming on as our technical advisor. So very familiar. Again, I was just trying to cut what seemed like it was 7 minutes down to 4 every time I was rehearsing it. So, but yeah, thank you for that.
I think that leaves you, Luke. We're over time, but I really want to give you a chance to give him feedback.
Yeah, sure. So I really like the personal connection to the story. I think that I could see this developing as there's no community that I've seen, but I have friends in this area that I think would really value the community. I love the name "We Are Not Alone." That makes a lot of sense to me. I sent you 2 things to at least think about in your presentation. One is a Medium post that David Sachs did recently called "The Burn Multiple" that I think will just be helpful in your thinking. And the second thing that I sent was something from James Courier at NFX about network effects. And I think in thinking through your product and also in thinking through how you present your product, both of those will be informative. And I'll just stop at that. Thank you.
Awesome. Thank you.
Yeah, thanks, Luke. All right, let's have our next startup. Next, we've got Mike Mortimer of Platform.
Hi, everyone.
Podium, sorry, Mike. Podium.
A big thing. Did I just hear popcorn?
Yeah, no, you definitely heard platform, and I meant podium.
Right.
Starting
Okay.
the timer. Yep.
Super. Can you see my screen okay? Yeah?
Yes, it's fully loaded.
Good stuff. Cool. Anyway, hi, everyone. My name's Mike. I'm the founder and CEO of Podium. I've been mountain biking for 15 years now, snowboarding for 4, and casual gaming since I can remember. And we all know how notoriously engaging computer games are. And it's always frustrated me that I can't experience that same level of engagement from action sports or any physical sport for that matter. For example, I can't instantly challenge my friends to see who gets down a trail faster, or maybe see who's progressing on jumps the quickest, or maybe receive a special award for falling over the least on a ski trip. And so Podium bridges the gap between the physical sports and digital gaming worlds to deliver experiences that 90% of our survey respondents said they want. And so we're delivering these gaming-like experiences through a digital hub for action sports, where you can engage your community, progress your skills, and challenge your rivals. There are 200 million in action sports today, which we can deliver these experiences to. So how do we do it? Well, you attach a Podium IoT device to your gear. So you can see the mountain biking example here. And we have a suite of sensors and proprietary algorithms inside, which allow us to deliver a broad range of time and skill-based challenges to the user. Once the action is over, you retell your story in the app, the Zone app. This is where you receive your awards, celebrate your friends' achievements, and find new people to challenge remotely or in person the next weekend. Current technology on the market today can't deliver these gaming-like experiences that consumers want. And that's because mobile apps like Strava lack data integrity. Only 28% trust today's tech. And electronic hardware like Garmin lack deep community engagement. And so bringing these two areas together is our differentiator, and it enables us to deliver engaging, rewarding gameplay across many physical sports. So there's obviously a much bigger go-to-market plan, but just to show you a little bit of it, we're available in the App Store for free, so you can download an app and experience the community features for free. That's what we give to the action sports world. And you can demo the full end-to-end experience at bike parks and ski resorts. If you want to progress your skills though, and challenge your rivals, you need to buy a device, and that's $170. And then we'd expect you to renew your subscription to the platform the following year for around $70. There's also a weekly rental option for those who prefer to rent their equipment, and that's very prominent in the snow sports industry. In terms of viability, we are modeling around a 69% gross margin after optimization of our COGS down to $50. And that assumes a customer acquisition cost of $30. Looking at some of our peer data to see the type of scale we may be able to achieve, Strava had 42 million users in 2019, and Peloton just recently achieved an $8 billion IPO valuation. The sports tech market is set for unprecedented growth at 20.6% compound annual growth rate predicted until 2024. So far, we've raised 250K. We've proven our core IoT technology and architecture, and we've begun alpha testing. We need 500K at a 4 million valuation in this round to complete the MVP and procure our first large batch of sales. Our team has over 35 years in consumer product and brand development experience, notably bringing Red Dot Design Award and IF Award winning products to market. And our long-term, our 10-year vision is to become a digital sports universe where we can incorporate many different sports on our architecture and on our platform. That's me.
All right, thanks, Mike. Judges, questions?
Okay, so you've mentioned that you plan to charge your consumers around $100 for this piece of hardware. And I'm curious, what's the bill of materials on that for you personally?
So the cost of goods, so absolutely everything there. Are you asking for the cost, the price of the BOM?
Yes, BOM.
So I mean, the BOM, yeah, is today, right now, it's about $100, right? And that's unoptimized. But obviously being a hardware product, a couple of iterations of engineering, and we're very confident, and we've got, you know, feedback from multiple engineering partners and suppliers that we can get that down to $50 COGS for the whole lot, including packaging after optimization. Yeah, so we're not worried about achieving that.
Mm-hmm. Last quick question. So here you talk about yourself in the last slide. It would have been helpful to learn more about your background and your team, or are you the solo founder?
Yeah, so there's three founders, and we're a team of 4, so 3 of them are founders, including myself, obviously. And yeah, my background, I come from technology sales. I've done 6 years of technology sales and 6 years of mechanical engineering. So I've been on both sides, designing and selling the technology, but that's in the B2B space. And my team have worked for some famous consumer brands in the UK, as I highlighted there, and delivered those products which won those awards as well. So yeah, that's our background: consumer and technology spaces. Yeah.
I'll jump in for just a quick question. So, you know, I've seen, you know, a few different kind of IoT action sports approaches,
Yeah.
You know, through Kickstarter, Indiegogo, a couple of companies. So what, I think, you know, they generally kind of apply, I think, a lot of the similar concepts together. So I guess I'm trying to understand what you really believe will help you break out of this space.
Yeah. So if you look carefully on any of those websites, and I actually talked to some of our startup competitors as well, and because we're looking at potential partnerships, but you know, if you look at their websites and their offering, it's all around metrics, it's all around measurement, and that is not the essence of action sports. People don't care as much about measurement. It's about engaging your community. None of them have a community first approach like we do. They're all point products which allow you to measure what you're doing, but there's no longevity in that play. And people get bored once they get it. All right, I'm good at jumps. That's the end. We're about engaging people. And that's why I refer to gaming, because when you game, it's forever interesting, because you go online and you can access thousands of different people and challenge them in different game modes. And that is the essence of our business. And you will not find that in all these other IoT plays. Does that make sense?
Yeah, definitely. I'll let the other judges jump in. Maybe I can save the follow-up for the feedback.
Okay.
So can you, sorry.
No, go ahead. Yeah, sorry.
Can you talk to us more about the competitors that you're looking at as far as your company's concerned? I heard big names like Peloton and so on and so forth, but is there anyone else doing anything like this?
Yeah, so I mean, you've got Woo Sports, you've got Carve, which is like a ski boot technology, which tells you how good you're in.
Right. Okay.
And Garmin. So it's those kind of things. But once again, like I say, they're all focused on measurement and individualism. Yeah.
No, I have the one for the ski boot. So I know, yeah, there's no engagement. It's just you're essentially, it's data for yourself and you only use it when you ski.
Absolutely.
There's nothing else to, yeah.
Absolutely.
So how do you plan? So I know you're in beta right now, right?
Yeah.
How do you, when do you think that you're going to launch? Like,
well, so everything from pretty much everything from a technical perspective has been proven now. So it's just a case of executing, and the lead time on getting a product that can be manufactured. Obviously, there's more testing to do. You know, we're looking around the 6 months, maybe 9 months mark. It always takes longer, right? So, you know, even though we're looking at 6 months and that's conservative, you know, let's say worst case 9 months to get something that we can start scaling. Yeah.
Okay. And how have you funded it? How have you funded it to date?
So the 250K that we've raised today is really sort of from my immediate network. There are some people that, you know, are CFO. For example, we've got a CFO of a company over here in Silicon Valley. You know, I guess you could call him a professional angel, but I mean, I think that's about as close as we get to like an angel, a professional angel or a well-known angel. The rest of that is friends, family, and my immediate network, pretty much.
Okay. And then I don't think I saw a slide on your ask. Are you looking to raise right now?
Yeah, so we're raised. So in order to, you know, to give us like 12 months run rate, as well as finish the MVP, and, you know, maybe and a marketing campaign, a small marketing campaign in that as well, we need $500,000, and we're doing that at a 4 million post-money valuation. But realistically, to launch a consumer brand, we need another 2.5 million. We're well aware of the marketing might that we need very quickly beyond that.
Okay. I'll let others ask other questions.
Yeah, and actually, well, let's move on to feedback. And if you do have further questions, you can kind of interweave it into your feedback maybe.
Okay, well, I guess I can start. So the first thing that really struck me was you mentioned a lot of statistics, for example, that 90% of survey respondents mentioned something, but in that case, I think it would be helpful to include your overall sample size, right? Because it can be 10 people or it can be 1 million people, and the results are very different in that regard. Also, when you talk about the market, you mention the specific growth rate of the sports tech market, right? But you don't explain to what figure it has grown to, which would have been far more helpful. And maybe you should even think about specifying the wider sports tech market to something which is aligned more specifically with your own product and segment, just so that investors know that you have researched that as well.
Absolutely, yeah. And so in the take-home version of this deck, all of that's there.
Okay, thank you.
Another judge?
Yeah, this is Luke. Just a quick one on manufacturing. I don't know that you need to go through it in great detail, but some information that shares where you are in prototyping and experience around contract manufacturing, I think would be would communicate something powerfully. It could be you know, experience from the team. You know, it could be as granular as manufacturing readiness levels, which I've seen before, and sometimes if you're allied already with a sort of hardware incubator, you know, there's an understanding that, you know, that you've probably been through there, you know, or a VC that's specialized in this area like Lemnos or something like that. There may be a pass of, okay, you guys already get this, but that would be, I think, a good addition.
Thanks, Luke.
Yeah.
I can jump in with this sort of feedback as to, I think, my question earlier around your sort of unique insight into this engagement element, which is, and I'm not sure, maybe I missed this, but I would have liked to see some validation of that insight through maybe some just rapid prototyping approaches. I mean, to me, it's not clear right now you need to invest into building hardware to prove that concept, right? because hardware is very expensive, and then the sort of the iteration cycles just look very different. So would have liked to see that kind of rapid prototyping software iteration approach, that you could sort of validate some of those concepts to take this next step.
Yeah, that's a fair point. And something, yeah, I'll think a little bit more about. That's something we haven't necessarily thought about from that perspective. So thanks for that. Yeah.
And I'll just add to that, I think this has already been said, but would have loved to have seen more of a background information on the team. So just, where you guys are coming from, what companies, what school, and just, in general. And I would have also liked to have seen a slide of how much you're raising and what you're going to use that capital for.
Okay, thank you.
All right, so I think that actually wraps it up. So we will have our next startup. So we'll actually, so it would be Kirfiraz Siddiqui with no GPS technologies.
Yes, hello, and I have started the video already, and now I'll share the screen. Okay, share the screen, and yes, share, and here we are. It's the slide says everything: geolocation without satellite communication. And let's go to the next slide. Why? What is happening with geo? Yeah. Existing geo location systems are GPS, American, European, Russian, Chinese, Japanese, Indian, and all are quite expensive to make itself. And it because it takes $1 billion per satellite, and American taxpayers pay around $2 million per day to maintain that system. Same happens with the European systems and Russians and all those things. Indians are a little bit cheaper, but still it costs. And those people who use GPS location, they spend a lot of energy in trying to get location from 12,000 miles up in the sky, and you have to have 4 or more satellites in line, and the battery, average cell phone battery consumes 100 milliamperes of current, and the time to get that first fixed is that's called TTFF, and that is around 1 minute. So it's a lot of power which your cell battery consumes, and that's why your cell battery goes down, because it keeps on asking, polling the location whenever you come to your house. It keeps on asking. It should know that you have reached the house anyway. So it's like you phone China and ask where I am, and keep on asking again and again. And what is the how? So this is totally stupid system. GPS system was a very smart system 50 years ago when it was designed, but not anymore. At that time, there were no Wi-Fi, there were no smartphones, there were no accelerometers of this quality, and there was no neural network, machine learning, and all those things. This thing all is not required at all in our system, because, say, for example, in our system, your cell phone battery will tell you where you are without asking anybody. How does it do it? Very easy. Solution is sensor actuated deep learning neural network to estimate your location. Like your Fitbit and your cell phone tells you how far you have gone, how much you have walked. So your sensors will track you, tell you how much you are moving, and it will keep on updating your location from an initial location. And that is called dead reckoning. Dead reckoning is an old technology. Scouts and those forest people and army people, they always used to use it. But the problem was this, that you have to have always an initial location. Say, and flyer people, airplanes, they used to use it before GPS, because they said, okay, you have flown 2 hours at that speed in south direction, so you must be in LA because you started from San Francisco. So that is just dead reckoning. But in those, the problem with dead reckoning is this, that you have to have an initial location, and there is error, which always accumulates. In sensors gives you error, and X. But nowadays, we have solved that problem by putting the neural network on the battery. So it keeps on updating the location all the time. Every battery operated device in our system will always know its location. Always know its location. Even a toy will know its location. If it's in China, it will speak Chinese. If it is in France, it will speak French. If it is in Saudi Arabia, it will speak Arabic. It is in America, it will speak American English. And if it's in England, it will speak English, because it will know the location. Now, how we do it? Why? What has changed is this, that sensors have become very, very cheap. You can get a very good IMU, inertial measurement unit, for under $1. And microcontrollers can run machine learning. And actually, machine learning is a very big name. What we are doing is we are crunching only 2 numbers, longitude and latitude. That's all. So a small, very inexpensive 30-cent microcontroller can do all that calculation and learn upon that thing. And now this is the strongest point of our technology, that we, other people, Department of Defense and all those people, they have been doing a lot of research on this, but their research was concentrated on improving the sensors, accuracy of sensors. We don't want that. We use machine learning to learn how to correct for the error. And that's the power of our technology. So that's what it is, sensor actuate. That's my patent application also on this, and we have filed PCT application, sensor actuated deep learning neural network to estimate geolocation. That's the basic concept. And this is the intellectual property. It has been filed, and the International Search Agency says, for which we paid to get the search done. They say that there is no example all over the world of anybody trying to put neural network on the battery. And that's what this is our unique feature.
And I'm sorry to chime in, but right now you are out of time, and I think we have to move to our judges.
Okay. And university has done it already. University has proof of concept, and we have prototype. And this is it. And cell phone battery. Let me just show you the last. This is the algorithm with which we train the thing. And this is also a training algorithm, and all training algorithm. And that's me. That's me. I have been doing location-based search for a lot of days. Okay, that's me. And judges, yes, here you are. Questions?
Questions.
I have 40 years of experience. I graduated in 1978, before all of you were born.
How much are you looking to raise?
2 million. 2 million.
And have you, you haven't tested this yet, right? Or
no, we have the proof of concept. We have the proof of concept. We have the prototype. This is this is what we are developing, the next prototype. And okay. This is that's how finally it will be. And we have proof of concept. We have everything. We are technically very advanced. And let me show you my team also, because you are very much into the team. And this is my another company. This is my team. All those people are there. So
are you running 2 companies at the same time?
Actually 3 companies.
You're running 3 companies right now.
Yeah, 3 companies. Yeah. These all my inventions. I'm serial inventor. I have got so many inventions, and I've got patents and issued patents. So
Okay.
yeah, so that's perfectly all right. I'm a serial inventor and serial entrepreneur.
Yep.
But my focus now, I'm going to give up. I develop it and I give it to somebody to run it. So the other companies are being run by other people. Now I'm focused on this.
And you're going to run this.
Yeah, now I'm going to run this. Yeah.
Okay. I'll let other judges also chime in.
So are you, I guess, can you just talk about what the business model for this company is? Because
Business
what I've heard
model,
is your invention.
yeah, we will license it. We'll license it to people because it will save so much energy to humanity. Like this is a company, soteriabig.com, Battery Innovation Group. They license their security technology because batteries explode. So they have. So we will license it to people, to cell phone, to toy manufacturer, to missile systems, to drone technology. We are in negotiation with a drone company right now. They will use our technology, and autonomous cars and all those things. They will have it because the GPS can be spoofed. GPS can be blocked out in tunnels. There are so many places where GPS is not accessible. So and what we want to do is $2 chip. Our technology will cost will eventually cost $2. You just put it on your battery and it works simply. We'll give it licenses to battery manufacturer. Location enabled battery. That will be the solution finally, and it will save a lot of energy for the humanity because we just keep on wasting energy in our batteries go down and all those things. Yes, it's disruptive technology. And we are very much in contact with our clients. And we are raising $2 million.
Other judges, do you have questions? We have less than a minute for questions.
I would expect a question from Ali Chen because he said he's into technology. Is he around?
Yeah, well, I'll let the other judges chime in.
Okay. Whatever. Just please.
Okay.
Maybe you could speak to how you would characterize technology readiness level here. I think that on a sort of NASA scale, this looks like a 3 out of 7 or so. And then also, where do you anticipate getting on kind of technology readiness with $2 million? And is this there are other questions around kind of licensing royalty rates and targets and this kind of thing, but maybe you could just start with that, a kind of a technology characterization of where you are right now and where you anticipate getting with $2 million.
Now we need to change the form factor. That's the only thing we need to do. We need to make it small and reduce the price to $2. This thing can be made very easily with $100. There are solutions which are there for $500, $5,000. But what we want to do is to make it the SoC, system on a chip, for $2. That's our target. For that, we need $2 million of R&D. The work has been done. The prototype is there. Everything, but we need to reduce it to a form factor which is, and to the price which is affordable, which can be put in the toys, in the cell phone, and all those things. That's the basic thing. And we, for training purposes, we use NFC technology, which is my passion for the last 10 years, near field communication, which is used for payment, but I used to train the neural network. And that's very secure way to train it. Nobody can fake it. Nobody can give the fake training data to spoof the geolocation. That's the major problem is spoofing and blackout. And we have solved all these problems. Any questions?
Is there any feedback that the judges would like to give?
Yeah.
Yeah, I'd like to give some feedback. So no doubt that you have lots of years of experience in engineering, but I think that if you plan to raise outside of the existing network, it would be quite helpful. Firstly, you can maybe focus your presentation on the key aspects. For example, you started to talk about patents. Patents are very important, but I guess they are far more important if an investor already has an understanding of things like your market, your competitive advantage, and other things, and then later on you can talk about patents. Also, it would be, I guess, quite helpful, once again, if you made a more clear LinkedIn bio, because on LinkedIn at the moment, it says that you are still a founder of Smart Bumper Sticker, right? And now here you are presenting a different startup, right? So I'm kind of confused.
Yeah, you are right. That's right, because Shayna asked, the 2 companies, and I run 3 companies. That is confusing for people. I'm out of pattern. I agree very well. Yeah, you are right.
Just to add to that, I think, look, you obviously have something here. You have, and you're very experienced, no doubt. But I think your deck for investors needs to be, you need to have a better narrative, if you'll say. Kind of like, just as an example, what we're looking for is we're a unique team, excited to solve a big and hard problem, and then go into like, we came up with a differentiated solution, and as a result, we're gaining solid traction, which we monetize fairly. So, and then go into financials. Our financials look extremely promising, but to get there, we need to raise a reasonable amount of funding. Obviously, that's very quick. It's not something you can really write down, but it needs to be tight, and you kind of need to go through those pieces of the team, the problem, the solution, traction, and financials, and ask.
Thank you. Yeah, that's a good input. Yeah, I will reorganize the deck here.
Yeah, I'll just throw in my quick 2 cents is that, yeah, I think that it's sort of, to add to what Shayna is saying, it lacks a cohesive story around what you're actually building. It's not clear to me up front that even what you're proposing needs to be a device and can't take advantage of what's already in a phone, right? There's built-in IMUs. There's lots of approaches they're using with Wi-Fi, cell tower triangulation, BLE, beacons, without addressing some of the sort of other approaches beyond just saying that a GPS chip, uses 100 milliamps. I think they're down to like 20 or 40 milliamps now.
Actually, it will in nanoamperes. The savings is several thousand times. We will our technology uses nanoamperes of current, while this is milliamperes, so 1,000 times savings. Yeah.
So yeah, I think my point is just having a sort of crisper story and addressing, how your solution fits into that more clearly and what kind of product it is. And also what kind of business you're building.
Yeah. Yeah, thank you very much. That's right. A story is important, I know, but my story is very long, so I didn't want to bore you with my story.
Okay, so lastly, Luke, did you have something to add before we move to?
Yeah, sure. Yeah. Thanks so much for the presentation. I think that in terms of narrative, in areas that are more complex, because I think that there are different kinds of venture investors. Some of them suffer from attention deficit disorder more than others, and sometimes it can make sense to write out a 6 to 10 minute Medium article that goes into greater depth for context, even that you can share prior to a meeting, and it gives them the ability to to opt into the meeting. It screens for seriousness, etc. So I like that as an area, especially if it's somewhat esoteric or if they're not coming in with a lot of relevant expertise, because this is the kind of thing that you could spend a lot of cycles going around to individual meetings without it being as productive as you want it to be. And then the second thing in terms of story, I mean, I think that you have a slide where you talk about cost and battery usage and system latency and system blackout, and then you toward the end you get to the point of the claims analysis around the IP filing, which is that there's apparently no prior art around putting neural networks on a battery, and so you could say, okay, we put a neural, combining these two otherwise disparate things that doesn't exist in the literature to date, and we create this kind of big order of magnitude improvement that solves these problems. And you can probably say some version of that within 20 seconds, and then you can probably reiterate.
Yeah, that's right. That's right. I agree. 100% agree. You are right. Yeah, that I take more time.
Thanks so much for the presentation.
Yeah, thank you. Thank you very much for the input. I learned something. Old men also learn sometime, Thank you.
Okay, thank you so much, judges. Okay, so we will move on to our final startup. We actually had another startup, but he had an emergency. He couldn't join us. So Al with CoilPay Technologies will be our last startup.
Okay, hey everybody. Can you see my screen?
It is loading right now. Yes.
Okay, perfect. Hi, my name is Elias and I'm the co-founder of Coil. So what is Coil, right? Coil is a payment-enabled smartwatch bought by banks in bulk and issued for free instead of plastic cards. So did you know that 83% of Generation Z would like to pay with a wearable, but only 14% of them actually owns one? So what I mean by that is all of the Apple Watches, all of the Fitbits, all of the Garmin watches, everything, it's only 14%. So that leaves 69% or almost 70% or 1.6 billion people completely untapped. So why is that? Well, because current solutions are really, really expensive and they don't work for everyone. So Apple Watch is $400 and the cheapest wearable that you can pay with is a Fitbit and it's $160. So why are we targeting banks? Well, banks, they don't have enough differentiating products to differentiate one bank from another bank. So that's why right now they're really desperate to innovate and to compete against other fintechs like Revolut, Venmo, and 26 and others. Even now Apple and Google and everybody else is coming into this space. So now you can ask, right, everybody has a phone, why wouldn't they just pay with their phone? Well, everybody has a phone and they can pay with their phones, but they're not paying with their phones. Only 24% of iPhone users actively use Apple Pay, but more than 80% of Apple Watch users are using Apple Pay on daily basis. So that's a big difference, not a 10% difference. So here is an opportunity, right? That banks with our solution can get new customers from other banks. They can retain the old ones from switching to other fintechs. And on top of all of that, they can increase transactions, which we'll get into a little bit later. So currently we have 3 sign-up banks. We have 22 banks in the pipeline, and we're going to deploy 150,000 devices in this year alone. And the current pipeline interest is around 10,500,000 devices. So we're raising 1.5 to get the first to deploy with the first 3 banks. So this is our team. We're all experienced entrepreneurs with multiple exits. My first exit was when I was 18. My co-founder, Matej, he was a manager at McKinsey in San Francisco. We have bank presidents, and our CPO actually is a team lead that built Google Pay, Apple Pay, Samsung Pay, pretty much any pay you can think of. And our advisors are Stanford professors, C-level employees at Pinterest, IIM professors, and really high up professors at employees at Philips and so on. So let me tell you a little bit more about our device. So our device has all of the smartwatch capabilities. You can answer and reject calls. You can send text messages. You can get all the fitness tracker capabilities. It can also run apps. But because it was built for payment, it has a lot of unique features. right? So it has contactless payments. You can swipe through payments. It can run all the real-time payments as well. You can check balance. It can recommend the card. It depends on the location you are. It also has all of your access cards, well, majority of your access cards. And of course, it has enhanced security. But the most important thing is it always works, even if you ran out of battery. So because it was built for payments, it has a lot of unique features that not even a Fitbit or Apple Watch or others have. So let me tell you a little bit more about the first financial health bracelet. Because we are interconnected with the bank backend system, our coil needs to have the whole ecosystem behind it. So it's comprised of Coil One, our device, Coil Pay, and Coil Dev. So Coil Pay is essentially a integration software that allows integration with any backend bank system. And Coil Dev is essentially a development solution for Coil One wearables and App Store for Coil One users. Because banks, they don't buy 100 devices, they buy 100,000, right? So what we build behind it is an app store where banks can go and build apps that they can leverage their customers and create meaningful partnerships with their existing customers, and on top of all of that, with their new partners. So apps can be like club memberships, instant loans, Metro cards, Uber, grocery stores, pretty much anything you can think of. So the market is really big. It's 200 billion right now. It's going to be 800 billion in the next 5 years. And it's going to scale even faster now with the contactless payments coming into view. We expect to deploy around 5 million devices in the next year and a half. So we make money we sell devices from $15 to $20 per device. It depends how many they buy. But the most important thing is we take cuts from each payment. And of course, we make money from apps and add-on services as well. So thank you. If you would like to see our device in person, please let me know and I will be glad to show it to you.
All right. Thank you, Al. Judges, please.
Okay, I'll ask a question. You may have already, I think you already touched upon this, but could you explain to me again why do customers use your product? Why would your customers use your product instead of the competitors? Is it just price?
No, so it's essentially free, right? It's free for the end consumer, right?
Right.
So they would use this because, first of all, the competitors. So everybody that we're talking about, Fitbit, Garmin, Apple, everybody is adding payments to their devices, right? Why? Because it brings continuity to the device. It brings everyday use, right? So and people are actually using those devices to pay with. And so that's where our solution is coming from, that if people are actually using this functionality more than anything else on the device, it should be a core functionality. So that's why we developed this wearable that we sell to banks, and they issue it instead of cards so that people would use it, because it's sticky, right? Because then you can load all of your cards to it. You can have the different apps to pay for your Metro, to get an instant loan when you pay, and so on and so on. And on top of all of that, banks get a lot of data. They get data where you paid, all of your access cards, when you went to work, and all of that, right? So that's really important to them as well.
Okay, and then one other question: what do you think the cost, your customer acquisition cost will be?
So currently, right now, we have more banks than we can handle, right? So we have 22 banks. Actually, banks are calling us right now. I don't know how they literally found out about us, but they are calling us, mainly through maybe IBM partnership that we have as well. But so currently we have 22 banks. We will probably get 2 more banks because we are part of Startup Bootcamp FinTech program, where we met a lot of banks actually. And these are just the ones that are interested in our solution, that expressed interest to want to sign up with us.
Okay, but you don't know what it will cost you. You haven't gotten that far. Is that what it sounds? That's what it sounds like. You don't know what your CAC is going to be.
For our acquisition, so no, we don't know because currently it's zero.
It's still early. Yeah.
Yeah.
That's fine. Okay. Thank you.
Okay, I also have a question. So I'm looking at your website right now, and here it says that you also offer Coil Dev, which is a platform for developers.
Yes.
I'm curious as to what kind of apps have the developers built for you by now? So what's the extent of partnerships on that end as well?
That's a great question. So right now, how we're doing it is when we sell to banks, we are talking to banks, and banks, some of them, they already have existing partnerships, right? So some of them have partnerships with hotel chains, some of them have partnership with local transportation systems. So with the first banks that we're launching, they're actually incorporating so that you don't have to buy a local transportation card anymore. So that you would just choose a card and just tap to pay. With one of the biggest Italian banks that we've been talking with, what they want to do is they want to collect loyalty points to add to any store you go automatically, and you don't have to check in to the hotel anymore. So you just go to the room and just tap, and the room is going to unlock. So those are type of apps that banks are looking at right now. But because Sky is pretty much the world is our oyster, I guess. So people can build pretty much anything they want. From instant loan applications. I want to buy these shoes, and I can just ask bank for that $20 loan, or some other app, or spend restrictions. Like, I don't want to spend money at this store, or something like that. It can be pretty much anything. But yeah.
Okay, judges, would you like to go into questions? Feedback.
Well, I was going to ask that.
And yeah, I realized
okay?
the judges didn't get to ask their questions, so kind of combine those two together.
Sure. Well, first of all, I think your presentation was impressive. Your team, that you've built looks actually quite impressive.
Thank you.
And so, I felt that the story sort of was nicely kind of put together. One thing that just sort of, as I was trying to grasp and better understand why banks would want to, basically, sign up for this and give this to their customers for free, was just this question around, I guess, what's the incentive for a bank to be giving this to their customers and fronting the cost of it when their competitors can also use this? Because if I'm a bank, right, and I want it, if I'm giving this to my customer for free, I would want lock-in on the customer, right? And so then this device becomes a single.
Yeah, exactly. So right now, I don't know if you know, but a current acquisition cost for a bank to get a new customer is around $180, right? For them to issue a card, it's around $4 to $6. It depends where they are in the world. So if they buy this device, right? So even if it's just 20 bucks or $5, let's go that they just buy just 20,000 of them, right? So and the price is $25. It's still $25, and then they spent additional $25 to market this. It's still a lot cheaper. It's 4 times cheaper to issue this and get a new customer in than to spend that money on traditional marketing and open a bank account with us and we're going to give you $50. Because what they're doing right now is they're running out of options and they're doing all those different things. They just open a bank account with us and we're going to give you $50, right? And what people do is they open a bank account, take the $50 out, and that's it, right? But with our solution, that's the whole point, right? So they give you this gift, right? And then you're going to keep on spending money, and it's not just you're going to spend more money on local transportation and the apps that they can develop for you. So they're going to get more transactional value from this device as well. So it's not but right now for them it's a marketing thing, right? So that's why we don't have that long sales cycles with banks, because what they do is they buy this as a marketing thing for them. You know, they market it to get new customers in. So that's also a good thing for us, how they view it for now.
So then what sort of data would they need to see on usage, right, for them to really continue using this, because, or you know, distributing this, right? Because they could just give this, you know, it's like for credit cards, they can give these out willy-nilly. They can sit in the drawer and someone may not use it, doesn't cost them much, but now you're actually giving something substantial, right?
Yeah, exactly. So what they're doing is you have to opt in to get one. So they do the whole marketing campaign, you know, and then people click to get essentially a free smartwatch that looks great and can do all those different things. With the banks that we did right now is they're all of them are oversubscribed. But we didn't launch with any bank right now. But what they want to do is with each bank in each country that we're talking about, that we're talking with, what they want to do is they want to have some sort of exclusivity, right? So some of them want to have like a 6-month exclusivity, or some of them want to have a year exclusivity. Above a year, we don't want to go. But that is resulted in the minimum buy quantity of the devices and how and the percentage of each payment that we take.
Thanks. I'll let the other judges.
You know, these are both in the question comment, the hybrid category. Thanks very much for the presentation, Aljay. I was wondering, I mean, I like the design. I would love to have any information that you can share a little bit about the design, and then secondly, and especially the length of the head of the watch, right? Because I mean that seems like the main design thesis that feels new to me. The second is about if you can contextualize this a little bit in terms of, and maybe entrepreneurs are doing this too much, but I think that there's a case around how the world did think about contactless payment, you know, prior to February 2020, and how it does now, and whatever data that you can you can support about. You know, in the post-COVID world, this is how the world is thinking about this, or this is how people are thinking about it, or gyms, or membership clubs, or anywhere where you would use it. You know, most everybody that's going to hear your pitch has gone to a grocery store where they see a sign for a preference to not use cash.
Yeah.
Yep.
Yeah. So it's exactly that, right? So I didn't want to put the coronavirus in the pitch because I'm guessing everybody is doing it right now. Yep. But yes, you know, cash was going away before Corona, right? Corona is just like fast forwarding things right now, you know, and everybody is going like touchless, you know, and the good thing about our devices, when you pay, you don't need to type in your PIN number as well, because that's not touchless, right? So if I use my card and I have to type in my PIN number, that's not touchless, right? So those are limitations that cards have that we don't have. And yeah, I would be more than happy to share you know, information about that. The second thing that I wanted to say, I just got an email to today from a sport center in Dubai, because we were in Dubai for our startup bootcamp program, fintech program, and they, I don't know how they learn about us, but they want to use our devices because they're building this brand new arena. They want to use our devices to check in, and they don't want to be touchless. So and they want to be touchless, right? So it's not our thing how we're doing it. They can be just one of the apps on the device, but yeah, you're right.
Thank you.
Is there anyone who hasn't given feedback? I think everyone has at this point. I think Alexander, did you have more that you wanted to say as feedback?
Yeah, I think I said what I wanted already.
Okay.
Okay. thank you everybody for your feedback. You know, if you would like to know more, just I don't know, maybe I can get, maybe you can just send me an email, or I can, you know, or send me an email here on the private chat, and then I can send you more information.
Yes, and you can also reach me as well, and I will be happy to share the contact information. All right, so that concludes our event. Thank you so much, everyone, for attending today. I guess our next event is next week, Tuesday. That will be a cannabis hemp pitch, followed next day by a state of blockchain industry panel. So please look out for our emails. Okay, everyone, have a great rest of your day and stay safe.
Thank you.
Thank you, Anna.
Thanks, guys.
Bye.